Hey, if you missed the first part of the rally, don't worry. We've got 4 picks this week that are going to blow your socks off. Let's jump in and take a look at them right now. Just a reminder that all the materials we do present are for training purposes. Traders should always paper trade any new method by the risk of their own personal capital, and past performance is no indication or promise of future performance. So the first stock for today is
Go ahead.
CROX.
Yeah, CROX is showing a turning around. I have a weekly signal
Okay.
this week, and the fundamentals are extremely strong,
Okay.
and that is why I picked it.
Okay. Now, are you buying here? Are you waiting for a little bit more of a pullback, or?
No, I'll probably buy it right here sometime around. I'll see how it behaves between 3 and 4.
Okay.
Most likely I'll buy it with about a 5% stop.
Okay. I was going to say it's got some really good, strong support down there,
Yep.
about the 5.5% level.
Yep.
I love that. The thing about Crocs also, guys, it does have a really good option. If you are an option trader, it has some good options trading there. And so my first pick is very simple. This is a pretty pattern. TK Tankers. And it's the name, there's some stock, it's just fun to say their name.
Yeah, I almost picked that stock today.
Really? So TK Tankers is a fun name to say. Here's the way I'm looking at trading this, guys. It'll give you the pros and the cons. One, we've come back. These long tails on the bottom show that buyers are supporting this at that level there, which just happens to correspond with that breakout area way over there. So that's what happens quite often. It's done a really nice pullback, and now we've got a break up to the upside, and this is after putting in these long tails. Hammer here, not quite a hammer there, another hammer here. So all these clues were saying, buy me, buy me, buy me. Now we're breaking back up above the 8-day moving average. The way I like to trade these, folks, I'm looking for a pullback on this one down to about somewhere between 48.40 up to 48.75. That's where I'd wait for a trigger to be able to get into a trade right there. What's my upside on this one? Well, there's about 11%. However, I'm looking to match the move from here to here. So I'd be looking for that to move about 30+% if I can pick it up in that zone right there. So that's what I've got. TNK. Neil, what's the triple screen say about TNK?
On the triple screen, it looks good. TNK, the weekly triple screen, actually is in progress for a long time. Daily one, it's in a pullback mode right now.
Okay.
So we'll see how it goes. The only other thing I can say on TNK is the current RS rating is 87, which is based on 12 months, and the 3-month RS rating is a little less than that, 85. That's the only thing that kind of held me back.
Because I like the comp rating 96, the accumulation distribution A-, SMR A, and the up-down ratio 1.6. So with the way it is right now, is if it stays above the 20 and you wanted to go ahead and take a buy on that, let me give you an indication. The low side there is at 7 to 8%. And so that's a little bit outside of my max 5 to 6%. But you could always, if you wanted to go ahead and take a position on that, reduce your position size so you're not risking more than you would risk on a full position at 5 to 6%. This is the next stock, and this is one of the ones we're going to be talking about this stock shortly on the face-to-face. But Anil, without giving too much away, I know you were in this before, you got stopped out, and we're going to be talking about why you're going to get back in. But tell us, if somebody is seeing 4 for the first time, why is it a good buy?
Number one, the compounded annual growth rate is fantastic. It's about 31% compounded annual growth rate.
Wow.
And it is still, if you look at MarketSmith, it's still in the base, and the weekly and daily triple screens are still active. And so if it's still in the base, after it breaks out, it has a probability of running. And the other fundamentals are just excellent. It passes 13 out of 13 on one of my tough screen.
Yeah, as you said, it's still in the base. And just to give you an idea on how far this could run, now I'm just taking a simple Fibonacci of this past run here, a monthly run here, and go up to the 200% mark up here. I'm looking at about $123 is an upside target. Somewhere between, I'd say, 105 to 123 would be my upside target on that.
Okay, good.
If you wonder what I did, folks, is I switched over to a monthly chart to see what kind of patterns were showing up on the monthly also. That's just a little trick you can do to give you a little bit higher level of projection. So before we get to my last pick, this is called a face-to-face trading tips that Anil and I are going to be doing. And if you have a question you would like us to answer, not about a specific stock, but a trading question. If you have any of those, leave a comment in the YouTube channel. I'll pick that up. We'll add that to the list for next week to take a look at. But today, Anil, the questions that we have are: one, the first trade gets stopped out, like happened with 4 for you, but you still want to, you still want to get into the stock because you think you really have a conviction about it, that it can do well, it's got good gradings. So what are the 3 things you take into consideration before you place your order to get back in?
Basically, these days, what I'm looking for is accumulation distribution. And this is very high. It has an A- in it right now. And up-down volume ratio is 1.7.
Okay.
Comp rating of 92, which is my usual cutoff on comp, was 95. But lately I have reduced it if there is a strong accumulation distribution and up-down volume ratio. And on this one, what happened, I had good profit in it, and trying to protect the profit, I had a 7% trailing stop limit stock on it. Stop.
Right.
Yesterday, because of the news, the global payment taking over or something, the stock really popped. It popped up and then came back down, and hence violated my 7% thing, but it kicked me out.
Okay.
Just based on the news. And I think the story is still intact.
Okay.
And if it's still in the base, not extended, then I'm willing to get back in. And that's the reason I'm getting back in.
So you can get back in without being afraid of what might happen?
Yeah, it's just like Lee Tanner says, that I get in, I just follow my rules.
There you go.
My rules will take care of me.
And that, that's one of the things that fear and uncertainty are the 2 fuels that I think fire up poor trading habits. And part of the way to get around fear and uncertainty is you ask yourself the question: if I take this trade, which is it fueling? Am I more afraid, fearful, or am I more uncertain? And what that'll oftentimes stem back to is you don't have a written plan. You don't have a winning plan, a trading plan all laid out, like Anil just talked about. He's just going to trade his plan, and his plan say, hey, I've got another trigger. I still believe this stock is going to do well. So he's still working within his plan, which is very, very important. Yeah. My simple thing on if I'm stopped out of something and I want to get back into it, Anil, I just basically wait for another technical setup. If the fundamentals are still in place, I just say, okay, fine. Because oftentimes what you find is price actions will move up and start hitting off of higher support. The ETF that I'm looking at is Nugget. That is the 3-time leverage ETF of the gold miners. And we had a huge rally attempt that took it back above its moving averages here with the Fed announcement. Really interesting. Now it got back up into the resistance here. I'm looking for a longer term move to the upside that coincides with the seasonality of gold and gold mining. As you see, the price action this week came back to the trend line that it had broken 3 weeks ago, kissed the trend line goodbye, and is starting to climb back up. And so what I'm looking for is a pullback somewhere between that level and, let's say, let's say the 20-day moving average, maybe in between the 20 and the 50, about there. So let me give you some numbers on that. So I'm looking for a pullback somewhere to 3180, 3184. There's 3240. And then that gap up right there at 3350. That's where I would put an alert in just to let me know. And then I would go in and construct my trade around that area. We've broken out of the downtrend line here. I expect a move back up to about $44, if not higher. If gold goes into a larger rally, which tends to happen during the seasonality between December going into early April, that could put us into a good position going forward. Let me give you a number here. We can do the similar type thing off of a weekly chart. And I'm going to go ahead and grab, there's a couple of different things I can grab. Let's grab this one here. I'm going to come back to that low right there. And as you see, the 100% move takes me up to 50. 200% takes me up to $75 for nugget. Those are that's my picks. Well, how's the triple screen looking on this one?
It's looking good, both on daily and weekly. We have the signals active, so let's see what happens.
Okay, excellent. Continue to remind yourself, especially going into the end of the year, that trading success isn't built overnight. It's built by a step-by-step process. And this is ancient trading wisdom from the ancient trader. Again, I want to thank everybody who did order the book. It's in print now on Amazon. And also, if you just want the e-version, you can get that from our website. It is ranked really high and continues to get 5-star ratings on Amazon. If you have a copy of the book and read it, please go over to Amazon and leave a comment. Aloha. God bless everybody. We'll see you next week.